Assalamu alaikum, hello and welcome. My name is Khalid Al-Hadrami, co-founder of Fetra. Today we're going to have our first podcast where we'll discuss credit, finance, and technology and how they merge together to shape up the future economy. Alongside myself, I have my dear co-founders, Dr. Mehdi Alizadeh and Mshar Al-Meir. If you're an entrepreneur, SME operator, or an investor, this podcast is just for you. So let's start with the big question. What are SMEs and what are their roles in the economy? SMEs are the backbone of every economy, yet they are severely underserved. SMEs suffer from lack of investment from banks, and they also suffer from the high collateral required and very long time allocation that they need to get their credit approved. So what does Fetra do? Fetra is not a bank, and Fetra is not a traditional lender. Fetra is an infrastructure finance platform that focuses on SME lending. So Fetra, in its core, focuses on financing SMEs by utilizing blockchain technology and providing its investors with suitable investment tools. So, Shari, how are you doing today?
I'm very good, thank you.
Great too. Dr. Mehdi Alizadeh,
Thank you.
how are you doing?
Doing fine, thanks.
So let's get down to business and understand, and let people understand what you're trying to do at Fetra. So Dr. Mehdi Alizadeh, can you, from your experience, talk to us about what is the issue in the market when it comes to SME financing?
Yeah, sure. So when it comes to SME financing, I would say one of the main challenges is the financing gap. So what I mean by that is there is a large number of SMEs that are underserved and they're underbanked because of their financial situation. Plenty of those SMEs, they do not have very solid financial records. They do not have credit history. And some of them, they are even working in cash-based markets.
Yes.
So that means they are kind of excluded from the trade credit allocation process.
Yes.
And that will have implications on the market on its own. For example, once they are not able to fund their businesses for various purposes, that affects the employment rates and it affects even the GDP on a larger scale. And that's exactly what we are focusing on.
Sure. So a lot of people would assume that banks are the solution that Dr. Mehdi kindly mentioned right now. So why don't banks really solve the SME issue now?
Unfortunately, most of the SMEs have gone to the banks to try to use the traditional route and try to get loans from those banks. What they found is that the bank has a very rigid requirements that frankly that does not meet their needs.
Yes.
They wanted a lot of things that they cannot offer. So here comes Fetra, which is very, very easy. Our needs from those SMEs is much less, but on the counterpart, it's not very. It is resilient, but in the same time, not as rigid as the banks.
Very nice. If I can add to your points, guys, what we notice that banks, especially in our region, the GCC region, are risk averse.
Yes.
When trying to allocate credit to small and medium enterprises. Honestly, what we have observed is that banks would usually prefer to finance big corporates and retail, where we end up having a very big segment in the market that is not served, which is the SME, and which is the thing that we're trying to solve here today. So in terms of the requirements that Mshari just mentioned, Mehdi, data plays a very big role in making up a decision. If a lender, whether it's a banking or a non-banking lender, wants to extend credit to an SME, how do you think Fetra differs in that aspect?
Yeah, sure. So regarding the issue of data, in fact, the way that banks are underwriting the risks is really focusing on financial information, and that's where the financing gap starts to appear because the SMEs are lacking those information, and therefore they would be excluded from the process of credit assessment and loan allocation. Now, in order to be able to serve that segment of the market, definitely we have to find a way around it. We have to come up with an alternative solution. And that means we have to revise the credit assessment system, and we have to be able to redefine the credit assessment models in a way that it makes use of less financial data and more of behavioral data and qualitative information.
Exactly.
And such information could be, for example, the segment that the business belongs to,
Yes.
the number of employees that are active in that particular business, and information such as the owners of the business, and etc.
So that brings me to the following question, Shari. Is the issue the bank itself, or there is something inherently wrong with the SMEs? Now, we know for sure, and this is what we're trying to solve, there's nothing wrong with the SMEs themselves, but what is the issue right there?
The issue is the bottom line is the banks are very conservative when giving out loans. So unfortunately, those conservation with the banks hurts the SME and creates a big gaps. This is why we find that most of the SMEs are underlent and suffers from that problem.
Very nice. In order to understand the problem in a better way, we have to all acknowledge that the regulator plays a big role in all of this scheme. And regulators in the GCC have been moving forward lately regarding the issue of the credit in the SME market, as Mehdi previously mentioned. Now, Mehdi, how would you, from a general view, evaluate the efforts of central banks and regulators in the GCC region on how they are approaching this issue?
Yeah, sure. Let me just flash back to the previous question.
Yes.
And just add on a little bit of comments to that. So regarding the banks, in fact, banks are following certain rules.
Yes.
And one of them would be the capital adequacy requirements.
Yes.
It would be the reserve requirements. And of course, they're looking at the cost per loan size and also the ticket sizes. So they are evaluating what is their profit margin and how much is the risk level that they are trying to take. And that, again, hinders them from venturing into issuing loans to those SMEs because they realize that the risk level is kind of outweighing the profit margin. So that's a roadblock over there. Now, going back to your question regarding the regulators.
Yes.
Regulators, they are another level of protection. Their role is to make sure that the infrastructure is maintaining its integrity. And definitely, they are trying to make sure that any new ideas in the form of a fintech, for instance, they are tested properly, they are audited properly before they hit the market, so that they do not create potential damages to the market itself. And therefore, some level of resistance is expected from the regulators. Now, of course, different countries, they are at different pages when it comes to the level of robustness and the advancement of the regulatory systems.
Yes.
And taking GCC as an example, for instance, we have certain countries that are pioneers when it comes to the fintech advancements and if I may add to that, even the blockchain developments.
Sure.
But nevertheless, their role is to safeguard the whole process. And therefore, adaptation of the idea cannot be achieved without their confirmation and without their, you can say, input.
Definitely, definitely. Picking up on the points that Mehdi mentioned, Mishari, you have a good experience discussing with regulators in the region. trying without mentioning any names, what is the feedback that you get when you expose your idea and your approach to those regulators? Again, just to confirm, Mehdi pointed out something very nice, which is that they are not on par regarding how acceptable they are when you want to apply your concept. But please do tell us what is your feedback?
My feedback is, when we sat down with them, okay, and we explained our idea and tried to see if there's any kind of move around or where is our place in those scheme. We found out that some regulators in the GCC, without mentioning any names, but we found out that some are resistant to that idea. Some will say, okay, come back to us in a couple of years. We'll be ready and we'll ride the waves together. And some of those are very, very acceptable to that idea. Very happy to venture with us in our infrastructure. So I think with time, everyone will be with you. But in the meantime, we have found out that some of them are with you and some of them are still lacking. Yes.
If I may add to what you guys have mentioned, the current scene in the regulatory aspect of fintechs, talking in general in the GCC, I believe it is much better than what has been adopted, let's say, 5 to 10 years ago. There is progress, and I personally believe that we will arrive at a very good place, and let's say another 10 years from now. I mean, the region, or the GCC region specifically, is at a position to be one of the leaders. I don't want to say to lead regulation or fintech regulation, but I think we are moving into that position. Mehdi, do you have any idea or any comment about the future of the regulation in the GCC region?
I personally would foresee that as a very bright future, and taking some of the countries in the region in mind, that they are really pioneering. In fact, they are even playing the role of a financial hub on a global scale, and that has attracted recently a lot of attention from the investors and from the startups alike, and the data speaks for itself.
Exactly.
Therefore, the future really lies within this region. I'm not trying to say exclusively, but at least it would really shine very bright in the future, not in so far future, in pretty near future, I would say.
That's very optimistic.
Yes, fingers crossed, doctor.
Yeah, always.
Yes. For a lending business to really succeed, the regulatory framework has to be there, definitely. But as we all know, credit bureaus also play a very big role in the business model. So, Mshari, again, you know a thing or two about credit bureaus in our region. So please do tell me, what have you arrived to? What is your personal experience when trying to deal with Fetra and the credit bureaus?
Well, we had a couple of meetings with the credit bureaus in the GCC. I think, unfortunately, the credit bureaus, when it comes to corporates and SMEs, they are very lacking in data. They are more focused on individuals to collect those data, and they have a very rigid system regarding those individuals. But when it comes to companies, we have found out that even the historical data they have, either it's very thin or it's so outdated. So you cannot even derive from those credit bureaus any current information that you can use it in your system. So I think maybe with time they will catch up,
And they are. I think some of the credit bureaus in the region are moving towards the idea of not only facilitating their data centers, or I mean their information only for individuals, but they're also trying to work on businesses very recently. Mehdi, how can we tackle the issue that Shari kindly mentioned? Because as a loan originator yourself, working with credit bureaus is a must, yet you will need to compensate somehow for the lack of data required, especially that your financial instrument that you're building would require more sets of data. How do you think you can tackle that issue?
Yeah, sure. I mean, at the end of the day, I would say either the data are there or you have to build it by yourself. So that means in our case, after really exploring the idea of pulling those information from the credit bureaus and recognizing that they are lacking in terms of their data adequacy, and also a lot of those SMEs, they do not even have, in fact, a file with them. That means they're non-existent in their database. So this means it's a call for us to create those database by ourselves. So that means we have to come up with a system of data collection and feeding them into a credit assessment engine so that it can, in a rigorous and in an objective way,
feed those
exactly.
credit bureaus. Yes.
Sure, and try to basically come up with a proper credit score so that we can, in a very, you can say, transparent and objective way, assess those SMEs. And this means those data are not necessarily financial information because they may not be even available. And as I said before, we need to focus more on qualitative information.
I think by then, Doctor, when you have that credit score on each individual companies, I think then the banks will reach out to you and see those informations are very valuable for their need. Yes.
At the end of the day, yeah, because this is going to be a unified system, and there are avenues for partnership and collaboration. So that means at some point those data will merge, and it will kind of aggregate into a more meaningful ecosystem of database.
Yes.
And there is potential collaboration even with credit bureaus because at the end, they would also be interested in those data.
Yes.
I think also an important player in the SME lending ecosystem are the suppliers. And we think we do have a very good understanding of what suppliers want and what is missing currently in the market, because when you are doing B2B transactions, the other B, doctor, is also very integral in this ecosystem. So, Shari, again, back to you. You had discussion with suppliers across different sectors and different industries and different countries too. Thank you.
Yes.
So, what is your feedback? I mean, you explained your service to them. Please just tell me what was their reaction at first, and then if you can expand on what is their feedback and how do they feel regarding the service that you're trying to offer.
Oh, they were thrilled about the idea itself, because when we sat down with them, we can see there's a common problem with most of those suppliers.
Funny enough, across different industries. Sorry.
Exactly. That problem was payment delay.
Yes.
Not enough leeway for any kind of. They put a system of payment. I think that made a lot of problems for those suppliers itself. When we introduced our idea to them, they find it very, 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 very helpful, and it will save them a lot of time. They will get their money instantly, which is a big hassle because you see, one of those supplier was waiting around for that payment for almost 6 months, and still no payment has been done.
We don't know if it ever arrived in the first place.
Yes.
Yes.
So I think, yes, we will provide a fantastic solution for them.
Hopefully.
Their words, not mine.
Yes.
And inshallah, يعني, in the future, they will join in without any hassle.
Yes. Mehdi, I think you have a lot to say regarding suppliers. I mean, personally, you had to spend a lot of time to explain to the suppliers that we were planning to work with what is Fetra and what we're trying to do.
Yeah, sure. So what I realized, as Mishari kindly said, is that suppliers, they're quite hesitant in a way to deal with customers. And most of their dealings with the SMEs, I would say, is relationship-based.
Yes.
And it's trust-based.
Yes.
And they prefer to work with repeat customers. So that means it's going to be quite difficult to break that barrier and enter into their trust space in the first place.
Yes.
And they prefer to have transactions with the same customers that they are on their whitelist.
Yes.
And that kind of, you can say, takes away the opportunity from them
Yes.
to deal with the rest of the SMEs that exist in the SME realm.
True.
And that again calls for an intermediary here to bridge the gap here.
Yes.
And kind of connect the suppliers to the SMEs and takes away that element of risk from their shoulder.
Of course.
And that's what they would love about it.
True. If you're asking a supplier to join this ecosystem, you will be definitely asking them to adopt somehow or to utilize the technology that you're going to offer, which is not an easy ask, if I can say. Suppliers, or in many cases, many stakeholders do have issues with the adoption of new technology when we force them to use new technology.
Yes, because most of them are still operating offline.
Exactly. So can you please expand on that? Yes.
So, yeah. Many of those suppliers that we sat down with them still using an offline system, papers and pens.
Yes.
So when you introduce this kind of idea that requires a systematic process, including computer and someone with a knowledge base of how to use one,
Yes.
and most of them are very let's say legacy thinking.
Yes. Exactly.
Okay, so I think we will have a hassle at the beginning, but I don't think it will take long for that to surpass that kind of issue.
Exactly. Especially if the technology that you're adopting does not really require the stakeholder that you're working with to have a very, long learning curve. I mean, I think this is one of the mistakes that technology companies make. They just start with the assumption that certain stakeholders do have the knowledge base and do have the time to learn how to use the technology, whereas in reality, doctor, the other party is really not interested in learning how to use your technology. So this is something that we're making sure of. Now I want to talk about the blockchain part, which is the very interesting part for me. So how does blockchain technology play a role in Fetra's business model?
Yeah, sure. So, in fact, there are different ways that you can attract the investment or liquidity, which is really the lifeblood of the whole lending system.
Sure.
And you can look into the traditional way versus you can look into the crypto
Yes.
world, or let's call it Web3 based investing. So our experience was that the traditional liquidity providers, which are banks and those credit institutions, again, they have some level of resistance when it comes to provision of liquidity for fintechs that are specifically active in SME financing.
Yes.
And it all goes back to the issue of the risk.
Yes, of course.
And therefore, if we really want to diversify the process, we should not be ignoring the massive opportunity that lies within the Web3 world. And if we can actually create that interface and reconcile the traditional financing to the Web3 and decentralized financing, we can actually utilize from that massive opportunity that is there, be it a retail investor or institutional investors that are existent on chain.
Yes.
So yeah,
So regarding your technology, I think it has a lot to offer compared to traditional investment. I mean, you personally talk a lot about crowdfunding. So how does your technology differ from traditional crowdfunding platforms that aid SME or tries to aid SMEs currently?
Let me ask you a question before I answer. What do you think the suppliers and the SMEs will respond to you coming from a place where you use Web3, when people are used to using Web2?
Honestly speaking, the way I see it is that it should be simple. It should be easy for everyone to use, yet the interface and the experience that has to do with Web3 shouldn't be exposed as much as possible to the supplier and the SME, meaning the transaction side, whereas the liquidity providers are the ones who should fully understand and fully comprehend the utility that blockchain can offer to them. So because at the end of the day, if we are going to push the crypto narrative on the suppliers and SMEs, I don't think this concept will pick up as fast as we want. Therefore, again, drawing a learning curve for our SMEs and suppliers for the future is something, but what is at hand is educating and explaining to the liquidity providers, aka our investors, how things are rolling out in the Web3 or blockchain world. Mehdi, if you have any addition.
yeah, I do agree with you. I think central to this ecosystem is be transparent to the investors.
Yes.
And explain the process to them, and give them the assurance about the range of profit margins and
Yes.
how really the system is going to work.
Yes.
That's really what matters most.
Yes.
And as you kindly said, the SMEs and the suppliers, they really do not need to really be engaged with the Web3 aspect here.
Yes.
Although this could be done at some stage.
Of course.
If the literacy is there, if the literacy level is there. However, to start with, really, for us, we have to pay further attention to the investors and make sure that they can be onboarded properly and they can understand the process, and we will be able to have a walkthrough with them so that they get interested in the idea and they trust the system and they find it attractive enough so that they can invest.
So it all goes back to the user journey, yes?
Yes.
How friendly it is, how accessible it is, because we want to build a system, an infrastructure, to be frank, that is appealing to each investor and each supplier and SME, because we don't want to scare them off with saying jargons like Web3, crypto, because it will get scary for them. It's a new thing for them.
May I have just a follow-up question for Mshari? In your point of view, do you think, and I'll ask you this question because I know you like this question, Doctor. Now, do you think SMEs really care about the blockchain infrastructure as we speak? I mean, as we go on, I don't want someone to watch that video again, and hopefully tomorrow we'll utilize blockchain with SMEs, but we're in 2025. SMEs are lacking financing. Is the source of liquidity or the technology behind the liquidity as important today for an SME as if you were an SME today?
If I were an SME today, with the current gap that I'm facing,
Yes.
and the money that I need to facilitate my need as a company, I will grab onto you and never let go. But
will you care about the technology?
Yeah, but when we see it from a technology side point, I think maybe it will take a little bit of convincing. As I said before and mentioned, have a very old-fashioned thinking, but I think the need far outweigh the understanding of that, and especially since we are making it very simple, and the part that currently the ones that it will be produced, the money will be dispersed to, is in DeFi, which is Web2, and that makes it a lot of simplicity added to the value of the process.
Mehdi.
Yeah, I just wanted to make an addition over here to the audience that
Thank you.
our project here is not solely focusing on the DeFi.
Yes.
That means our objective is really to have a hybrid ecosystem in which all liquidity is welcome from any avenue, be it TradFi or DeFi.
True.
So just to make the clarification.
Can you answer the question? Do you believe that SMEs at this current stage are really interested in understanding or fully understanding what is in the back end regarding your blockchain technology? I mean, their priorities, basically.
Yep. So to answer shortly, I don't think they're interested that much,
Yes.
and probably they do not need to be. So yeah.
Okay, that's a very short question. I mean, yeah, we can build on this definitely in the future. That's not a long life commitment. Definitely at some point, blockchain can have an added value directly to the SME. But what we really want to make sure about right now is that SMEs do have a seamless and easy and fast customer journey with Fetra. So many people will ask now, Mehdi, what is the added value for me as an investor? Now let's talk from the liquidity provider side. What is the added value for me as an investor compared to a traditional crowdfunding platform? So definitely you guys have something to add.
Yeah, so the way we want to basically roll out the process is by tiering the SMEs based on the risk level. And that means whoever is the investor, they can adjust their investment based on the risk appetite. That's one. And the second one is that the way we are offering the SME financing, it will unlock a lot of potential for the investors to, in fact, invest in projects that nonetheless are not available with traditional financing, because the usual mutual funds or the other forms of traditional funds, they may not really have that interest to invest in that segment of the market. And that means the potential gains are unrealized for the investors.
Very beautiful. And what about companies that, or fintech companies that are existent right now, yet they don't utilize blockchain technology? Definitely blockchain technology has an advantage, and I think your audience would want to know, I mean, why shouldn't I join or invest in a Web2 crowdfunding platform that lends SME?
Yeah, so when it comes to Web3, again, it gives a lot of access to the investors by fractionalizing the investment process.
Yes.
In fact, you can lower the minimum threshold requirement for investment.
Very beautiful.
And again, you can have different classes of assets to invest in. And this is what's happening in the Web3,
Yes.
especially in RWA,
Yes.
or real world asset tokenization.
Yes.
And that's, again, a new exciting era for the investment
Definitely.
that nevertheless is really not available in TradFi.
Definitely. May I add also, I have two other favorites, which are
Clarity.
transparency and also the secondary market. So I will talk a little bit about the secondary market. I'll let you talk about transparency. So the idea of me as an investor being able to exit my position at an investment at any time, this is, I think, a very big plus compared to what's currently available on the market. I mean, today, to a large extent, we don't want to generalize this concept, but once I make an investment in crowdfunding, most probably I'm stuck with them until that project is done or the lockup period is finalized. But blockchain technology here, it gives me this advantage of being able to exit whenever I need. So I think that's a big push, and I think companies like BlackRock, when they are adopting real-world asset tokenization, this is the biggest advantage that they're selling at the moment. You can exit your position at any time. You're a big fan of transparency in blockchain and what added value this has for an investor, again, compared to crowdfunding. So
Any person can just go ahead and see every transaction that concur within our project and any project that is the smart chain. So the blockchain are very transparent. Anyone can see where's the money going, from where to where, and this kind of transparency is very
essential when it comes to investing, right?
it is essential, but unfortunately, it is lacking in the Web 2, as you kindly mentioned. It is not as apparent, clarified, transparent as Web 3. I think that's a plus when it comes to that kind of hesitation when you want to enter these kind of contracts.
You as an investor, I assume, would feel much more comfortable in analyzing a fund, observing all of the transactions going in,
Exactly.
okay, and being sure that whatever feedback that you're getting back is actually accurate and
Traceable.
and no one can play with it or
Tamper those information.
tamper those information. I mean,
Exactly.
even you as a retail investor, it would have much influence on your investment decision. Correct me if I'm wrong.
Yeah, because everyone is they're paying money. Yeah.
Yes.
So people are paying out of pocket. They want to see where their money is.
Yes.
They want to see where does it go. So everything there is transparent. Everything is shown. This makes a lot of encouragement when you want to double down on what you are paying.
What you're investing in, yes.
So this kind of transparency and introducing the secondary market as well is a very big selling point when it comes to Web3. This is what I think. What do you think, Doctor?
Yeah, I can only confirm you by the fact that the smart contracts basically they are paving the way, and all the transactions are logged there, they're registered there, be it the interest payments back to the investors or be it cash flows in any direction, and they are permanently there. They're immutable information, and that's really a very strong selling point, as you said, that sets it apart from the TradFi.
Of course.
Yeah.
If you can kindly build on what Mshari said, and can you explain to us what's going on and how will this influence the tokenization and real-world asset movement that's happening right now? I mean, we are lucky to be or reside in a region or to operate in a region that is witnessing a lot of adoption for the tokenization of real-world assets. And I believe the aspects that Mshari mentioned are the main drivers of this movement. So if you can please inform us what's going on and how does it benefit us?
Yes, so there has recently been a lot of progress on the RWA tokenization front. And of course, when we talk about RWA, again, we have to specify because there are different asset classes.
Yes.
RWA can fall under the category of real estate and more of those tangible assets, but nevertheless, a part that is kind of overlooked is private credit tokenization, and that's where basically our idea is centered around.
Yeah.
And in the same way that we can tokenize real-world assets, we can also go ahead and tokenize private credit, we can tokenize debts, equities, etc. And again, that gives a lot of, you can say, access to the investors.
Yes.
And this is another exciting area that I would say soon we are going to see a lot of developments.
Hopefully we're early, Doctor.
I believe so.
Yours,
For sure, we are not late.
This gives access, I think. I think this gives access or pull power for even the smallest investor to join in, because you can join in with as little as like $100, and as maximum as whatever that contract is.
Still, if I may cut you, we forgot to mention it. I mean, the global exposure also that tokenization gives you. I mean, you can invest with $100, but anywhere around the world.
Yes.
And vice versa. As a loan originator, this $100, provided that is properly KYB'd, as we assume the regulator would demand, this can come from any place, which is like magic, right?
Yes. This kind of regulation from the regulator concerning our company when it comes to bringing out the license itself, it's very rigid. It's very thought through. It gives no margin of error.
Yes.
It gives credibility. It gives you that kind of authenticity, because not everyone can join in. They have to be at a certain criteria. So after that KYB and KYC for that liquid providers, anyone can, once they get approved, anyone can join in and just invest. And that tokenization of every little thing nowadays, not everything, because I think that this is a topic that you want to talk about, but most things can be tokenized, and this gives a lot of great access for everyone to join in and be part of that ecosystem.
Exactly.
And if I may add something over here, that when we talk about tokenization of real-world assets, we have to really differentiate it from cryptocurrency speculation, because these are very different.
Yes.
In fact, there are lots of tokens out there, cryptocurrency tokens, that they are not backed by any, let's say, legal framework,
Yeah.
and they are not representing any asset by itself.
Mm-hmm.
And from that perspective, we have to realize that the real-world asset tokenized, or let's say the tokens, they are, in a way, or in a nature, they are security tokens. And they're very different from other types of cryptocurrency tokens.
Yes.
And that should kind of be clarified for the mass crowd, because the usual perspective might be that, okay, this is a cryptocurrency token, so what difference it has from the other tokens?
It's backed up by a real thing.
Exactly. I think we should dedicate a specific episode discussing the regulations regarding security and also utility tokens in the GCC region, and how do they fit into our ecosystem. So thank you, Dr. Mahdi. Thank you, Msharif,
Welcome.
for your time. I hope that this episode wasn't heavy on the audience. We have a lot to say, a lot to tell in the future episodes. So thank you again for joining us.
Thank you.
Thank you.
Thank you.